Welcome to the Trading Lounge and the day ahead report. And following on from yesterday, everything is pretty much on track, except for the base metals and the precious metals have moved up strongly. And that's really based, from what I can see so far, is based off the I thought that the employment figures would have been a bit better because of the ADP figures, but that wasn't the case. They were softer, which calls for the Feds to put in more stimulus, and obviously that's probably just more money into the system from the bonds. So that creates buying for the precious metals, and it seems the base metals have followed that. So the calling for the likelihood, or the calling for more stimulus, would come from the next meeting from the Feds, which will be, I think it's on the 13th, but I'll double check that. So if that's the case, we could, that would be sort of next Wednesday, Thursday. So that means that we can kind of expect the major indices and so forth to be sort of supported. I don't know sort of how buoyant, because I feel that if we're looking at this 5-wave structure through here for the indices, we've really had the third wave through there. So we'd be looking at the fourth wave on, this is the Dow Jones here on the daily chart at the 3,300 here, and then another push to the upside. If we look at that 5-wave structure on sort of an intraday basis with the S&P 500, this is the count that we're looking at. So so up for 1 and back for 2, and then we're just working out 1, 2, and then we're working out 1, 2, 3, 4, 5 for the top of the third. There'll be the fourth. The fifth will come in here at the 144. We're expected the third wave to be there. The 144s where Gann and Fibonacci or Elliott wave, well, more so Fibbo really, that meet. So it should have some sort of holding point there. And seeing a correction, then perhaps one more little push up through here to get it. So with all trends of different degrees, there's always the beginning, the middle, and the ending here. So coming into next Wednesday, Thursday, we should see that sort of topping out here. So we don't expect the indices to really push up strongly in the meantime. Well, not that I can see anything anyway. There is some trade figures coming out for the for China on Sunday. So just keep an eye on those for the Monday on the Australian market. The European markets are pretty much the same as this as well. So we've got the FTSE here at 5.8. For the people that know the trading levels, a 5.8 profit-taking number. So, there's going to be some type of, correction here as this price weaves its way across the 58 here. Yes, it can push up, and yes, we do expect the first high above the level, then the correction across here in 3 waves, and then perhaps support over here, and then another little edge up through here. The DAX is much the same too at 7,200 here, and it's had its trend here as well. So we have to, there is a beginning, a middle, and an end to a trend. So we have to expect a correction here. But if wrong, if it's buoyant, then day traders would use the top of subgroup 1 there to trade, which would be the 30 there, the 72.30. So you'd want support on top of that before going long there. The Australian market, what we're looking for here, and it's pretty much the same sort of story as been mentioned, where looking at a correction basically unfolding across the 4,300, which is top of minor group 1. On the daily chart for the for this market, it appears that we've got 5 waves down through here on the cash daily. This is the cash market, but it's also got the futures priced into it as well. And in that case, it appears to be more corrective coming down through here. But I'm mindful of this being 5 waves down here and also corrective down here as well. But what that will do, if that's the case, then we would see an A and a B and a C wave over here. So we would expect the wave 4 anyway to be more of a complicated structure rather than these waves 1 to 2 here were simple and fast and sharp. That means that wave 4s would be sideways and complex. So we do need to allow for more corrective patterns to occur across here. There's various ways to count this particular structure, but just moving in here for the last few days here. This move up here can be counted as an impulse wave up through here. It's a bit dodgy for wave one. I'm not really sure how to count that there. It's just a bit messy, but somewhere in there, we're looking for a 1 and a 2. And the third wave here showing the strong move up through here would be the 1, the 2, the 3, the 4, and the 5 for the third wave. And the fifth wave would have the 5-wave structures in as well, the 1 and the 2, the third, the fourth, and the fifth here, which is rather small, but we have to work with that. But this move down through here is actually in 5 waves through here. So if we've got 5 here, that means that we should, after a corrective move through here, should see another 5 down through here. So I've labelled it as an A and a B and a C through here, but I'm unsure, and I'm unsure about this whole correction across the 43 here. So it's really important that you use support and resistance that know exactly what price point that you're working from. I've put this little move up through here because this move appears here to be sort of corrective in its pattern, and if the cash does the open moves up on the Monday morning, and the CNY figures, the Chinese figures coming in, manufacturing figures coming in as well on the Sunday, would also sort of impact on this as well. But this does look corrective, so it's a matter of this pushing up here and then coming back and checking, and if it finds support after that, then we can go along from that. Otherwise, if it fails to find support, then we have to look further down through here as the C wave, which would be in 5 waves here. So yeah, a little bit tricky on that note there. Let's have a look at the currencies, because that's where the currencies and the metals. So we'll look at the commodities first, as that's where the moves come from. Okay, starting with the US dollar here, it finally broke through the 81, which was pretty much the weekly trend line support as well. So we've had a clean break through that. And now we're looking down at the 80 through here. Now, we can count from this section here, we can count the little 5 waves down from either wave 1 to here or 1 to here, then back for wave 2, and then this is the third wave unfolding down through here, which is not complete yet either. Then we'll have the fourth and the fifth. Now the stock markets are like this in reverse for the highs, so we should see some sort of consolidation around the 80, and the price will fluctuate both sides of this. So this should also reflect back into gold and silver and also copper as well, all the base metals and precious metals as well. And but what I also wanted to point out too is that we're sort of staying with the trend here, this larger trend coming down here from this high down through here. Realistically, this is all impulse wave stuff, so we could label it as an ABC correction coming back, but at the same time I just want to be aware that we do have 5 waves coming down through here as a possible larger wave 1 rather than an A wave, and back for wave 2 here, and then another smaller wave 1 to the downside, and be a wave 2 coming back to this side over here, and then this 5 wave whole structure coming down through here as well. So we could have a larger impulse wave developing to the downside, and if that's the case, then we would see larger moves up in the currencies and also gold as well. So when we do have a look at gold in the larger picture here, I just wanted to point out here, we can obviously see it's really becoming quite strong through here. So if the US dollar does finish down around the 80, then we'll see this top out around here as well, the 1750 and so forth through here. In the larger picture here on our weekly charts for gold, you'll see that we had it up here around the 1728 mark. So it's really getting up there. As such, the trend line resistance from this point through here cuts in around this sort of area here as well. The larger picture here is that we are looking at this being a wave 3 up here, and we're looking at this basically being a whole wave 4 coming down through here. We just always figured that there would be a move up through here, then one more down for this wave 4 to complete itself over here in a complex correction. But I'm also mindful as well, if the US dollar continues to push down in that unfolding impulse wave, if that's going to be the case, then we really need to put this wave 4 over here as such. So this would be would be completed here as such, and this would be from that wave 3 over here. This would be the A wave here, an A and a B and a C for the larger B wave here, and the C wave down through here. But this doesn't really count very well as a C wave coming down through here, so I'm mindful of that as well. So it's really going to depend on the US dollar and how this pans out through here. If this market finds support on the 1800 here, then we'll be looking at making new highs above the 2000 here. That would be looking for a larger 5-wave structure to the upside. But I'm not keen on that just yet either, because this particular first move through here is a corrective wave. So that simple fact alone makes all of this corrective here. So we really need to allow this to play out through here, and that's the same with the tops in the indices as well. As tempting as it is to go long, and we are long, so we'll always be on the right side of things. And when it comes down to trading, for me, is that this once we'd found support onto here, then gold become on the 1650, the medium level, then it becomes the market becomes positive for me at that stage, and then we'll always be looking to the next level, which is the 1800, but also being mindful of the 1772 here. So in the shorter term picture here, then trade the levels. So above the 1700 here, the top of group 1, subgroup 1, the 10, 20 and 30, the price would have to find support on top of the 30 there before there's any further movement to the upside there. If I just got a picture here, not that one, maybe this one could do the trick. So we were looking at this little 5-wave structure up here, which was correct, and it has pulled back, but then it's pushed up here, so that's why we're looking at an extending structure up through there. But this little move up here would be in 5 waves as well, so it really needs to come back into this area through here to find support here. So that's what we'll be seeing through here. This little structure up here needs to correct, so it'll come back in through here. It's likely to come down to 1720 here, but if it comes in like an A and a B and a C, and then it finds support on the 30, then we can look at the 50 here. I could be wrong and it can push up through to here first, but after a trend comes a correction. So, and if we're going to trade, it's safer to trade from the corrective pattern rather than chasing the market to the upside, because even if it moves to the upside, it wouldn't move far. That's the thing. The copper market's the same as well. Just looking at the daily chart here as well, it's as I've pointed out a few times before, this whole pattern down the bottom here has been the same as gold, but it's always been very sluggish to move off. But that's not the case now, is it? And this move up through here now, when it breaks out of a trend channel through here, it's really a significant point to make, but it also makes the point of this being a 3rd wave to the upside as well. So once if we've got support on the 350 here, then the next level up is the 380, 1, 2, 3, 5 and 8. So that's what we'd be looking at there. But in saying that, the little group, this is all part of group 2 here, so the 65, 72 and the 80 are going to come into play here. So looking at this little structure up through here, we would be seeing, after a move up through here, it may not be finished just yet, but we'd be looking for a 3rd wave and a 4th wave across here, and then finding support on the 365 and then moving up to the 372, which would be just a tad higher through here to finish another little structure at that point there. So copper's up, so the resources in Australia and Canada, global material sectors will be buoyant, and that's what we've been looking for from last week. And I was expecting it to come from the share market stocks, as it has, but I wasn't expecting it to move up that quickly for for copper, but we knew yesterday, the previous day rather, that the move up through here and coming back and finding support on here meant that it was a positive for this market. However, I didn't expect it to move up this far here because I wasn't expecting the employment figures to be as low as they are, but they weren't that low really, but it just gave cause for pressure on the Feds to offer more money to the system. So the oil market's really holding its own as well on top because of stock, of course, but still sitting up there quite nicely on the 95 here. It hasn't taken off like the other commodities, but it could. And all this pattern through here, we've been playing this out as a corrective pattern. So we're still sort of, even though it's getting big and ugly and it's taking a lot of time, we're still expecting it to move to the upside. So we'll just be patient, and if we're wrong at some stage, then where we would be wrong, or I would be wrong, would be the 95 being a tested resistance here. That's what we'd be looking for. But otherwise, apart from that, it would be positive to the upside. Okay, let's have a look at the currencies. Okay, starting with the Australian dollar this time, and we've had a strong move in the Australian dollar. And as you know, we were counting 5 waves to the downside. And if the market moves above 104.10, then it would eliminate the 5-wave structure that we have to the downside. And that would leave us 3 waves to the downside. That would leave us the A, the B, and the C, which is corrective, which still would make up an A wave. So we'd put the A wave here, and then we'd look at having a B wave through here as well. It is a little bit small to call this whole move down here the E wave, but it may be possible. But we'll just see how we go with this first. But one step at a time. So the A, B, if this breaks through the 104 through here, then this would be the A, the B, and the C to make either the A wave or wave E, but we were expecting wave E to come down a bit further than this. But markets have been headline driven somewhat, so we'll see what manufacturing figures come out of China on the Sunday as well. That will have some sort of impact on the longer term of things as well. So yeah, so look, just drilling in there a little bit further through here. If this at this stage, it would make a move up in terms of an A and a B, and that's just, I've got that labelled as 1, but an A and a B, and 5 waves up for a C wave if it was going to stay below this. If it goes up past the 10 here, then it would eliminate that count that we have, and then we would label it a larger 5-wave structure up in terms of the 1, the 2, and then the 5 waves up through here for the wave 3, the wave 4, and the wave 5 here, and then seeing a larger correction across here. So just give that a little bit more time to play out through there, and it's all sort of touch and go really, and it'll depend on what the US dollar is doing as well in terms of its structure to the downside. Now, this is the bigger picture for the US dollar, and this is how it can be counted. So it's either down for wave 1 or the A wave, back for wave 2 and the B wave, and then down for the C wave through here, and that's the end of it, and then we will see a push up through that point. Or if we're going to, and I've got to keep both counts on the table until we can eliminate one, the other side of it is this down for 1 here, back for 2 here, and then 5 waves down of one smaller degree, the 1, the 2, the 3, the 4, and the 5 here for wave 3. And then we'll see a wave 4 here, and then a wave 5. Now, if we do get a larger 5 waves here, if that's the case, then we're going to be in for a bigger bear market on the US dollar. And that means that we would see the euro push much higher as well. But we'll just play one thing at a time. This count that we've had through here as a wave 4 moving up through here, it's okay where it is at the moment at the 128 as a wave 4 of 1 lesser degree, but we don't really want to see it finding support on the 128 and then moving up to the 130. If that's going to be the case, then we would have we need to look at the wave structure again. So from wave 2 up here down to wave 3 here, we would have to basically change that somewhat, and we would be looking at a 61.8 retracement level from here, which comes in around this area through up here, which really is a retest of the 130 here. The 130 is important because it's the top of minor group 1, and if support ever became on top of the minor group 1 here, on the top of minor group 1, well, then we'd have a much more bullish picture in play as well. So we're not going to turn bullish just yet, but I would if the support came in on top of the 130 there. It is also the supply level over here as well. So it's the 61.8 retracement level, it's the supply level, and it's a trading level as well. So there's a lot going on here. But what we would have to call this at this point here it's still a wave 4 at the moment, but if it moves up, then we would end up reworking the wave structure and calling this a wave, instead of a wave 4 up here, a wave 2. So this would all be down as a much bearish picture as a wave 1 down here, and then a back for wave 2 at this point through here, and then move down further down from that point. So it's just going to be interesting to see all of this won't really work itself out until after mid this week, in terms of the Fed's meeting coming out, to see what they're actually going to offer to the markets. We can see what the Europeans have done to the markets in supporting the currencies in each country, and what that's done. You can see in the Shanghai and the Shenzhen market what powerful moves that have occurred through those markets. In fact, we can have a look at those now. This is the Shanghai market here. Yes, we were expecting a bounce off these lows here, but more so down at the 2000 through here. So coming just back in here a little bit, moving. Oh well, anyway, the major trading level down here was 2, so I was expecting a bounce off here, and it's happened earlier than expected, on strong volume as well. As mentioned yesterday, the Europeans, 35% of China's income as a client in that section, so that means a lot to them for the Europeans to save the currency there. So yes. All right. So just breaking this down a little bit here in the euro as well, is that the 128 through here, we knew that while the market was this is where the trading levels come in and override Elliott, basically, because they just give you such a good place to work from, and so we knew that the 125 being support through here, then the bias is long to the upside. So what we're doing now is we're counting this little 5-wave structure to the upside, so there'll be still a little 3 and 4 here, the same as in stocks as well. So we can expect some sort of consolidation around the 128, and then another little push up, and then we'll see what happens from that time. We've either got a top in play there, and the downside in the US dollar as well, and also and this would also reflect the indices having their top in play there as well. But that would take us through to the mid next week, and we'll see these markets edge up until that meeting on the 13th, I think it is. And then we'll see what happens from that point there. Now, in seeing what happens, we would either be seeing a move coming down through here in a 5-wave structure, or we would be seeing a corrective move coming down. If we see a corrective move, well, quite simply, then we're going higher, and that's the side that we'll trade on. If we do get the 5 waves down, we will get 5 waves down and 3 waves back up in both cases, and then we'll see 5 waves down through here. But if this extends into a further 5 waves down, then we will be there will be at concern at that point there. So if we see a 1, 2, 3, 4, 5 like that, then of at least that size, then we know that we will be getting another 5 down through here and so on, and that will give us our bear market from that point. But if we only get 3 here, then we'll be looking at getting another 5 to the upside there. So we'll see where we go there. So we know where we are for the time being. That's all, and that's the important thing, and we'll play it out from that point. So, alrighty. Well, good morning and good luck.